I think the key is having the right mindset and doing a routine.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Jonathan Wei. Jonathan, how are you doing today?
I'm doing awesome today. Thank you.
Yeah, absolutely. Appreciate you joining me on the show. I was on your show recently, and we've actually had some good conversations recently. So we put we're about to buy a self-storage building, and we're just going to buy it, myself and my two partners, and dip our toe in the water. And we thought, well, who do we know that self-storage that we can talk to? And so we got you. You're gracious enough to get on the call with us and talk us through kind of some of the things that we need to look out for. And then in particular with that deal, and I'm glad you did, we decided we're not going to move forward with this deal for numerous reasons. But you were definitely a wealth of knowledge. So appreciate you doing that. And that was definitely gracious of your time. So a
Well,
little bit about Jonathan. He started in residential real estate in 2003, discovered his passion real estate. And in 2018, he expanded to commercial real estate, founded Greystone Capital Group, and they specialize in multifamily self-storage facilities. He has over 2,300 units and $100 million in real estate portfolio. He's also a mentor and a podcast host of a show called Building Wealth Through Commercial Real Estate. Jonathan, with that said, give our listeners a bit more about your background.
sure. I was a typical sort of immigrant, and I was born in Saigon, Vietnam, during turbulent times, and we escaped for political reasons. The communist regime taking over. They used to beat and rob my father, put us in jail for no
Mm,
reason. So because of that, we had to leave because political asylum in a way.
yeah.
So we fled by boat and went into we just try to flee the country, and wound up in Hong Kong in a refugee camp for one or
Mm,
2 years until my uncle was able to finally sponsor us to America.
wow.
And when I came here, we had nothing because basically when a war-torn country, they take all your money, rob all your money, you have no money left. So we had to rebuild from scratch. My father was a dentist in Vietnam. He was a wealthy dentist. But after I came here with nothing, you can't be certified as a dentist in the United States because it's different standards. So he ended up being a mailman in the post office because they said that if you do a mailman, you get a guaranteed job, you get government benefits like a pension. And because he couldn't be a dentist, he had to go become a mail carrier for the U.S. Post Office. And he did it for many years until he retired. To support us, me and my brother, three kids. So I have two brothers, so it's three kids in the family. He supported three kids to put table on the food on the table for us because we were poor growing up. And I grew up in New Jersey in the shadows of New York City, and I worked really hard and studied to become an accountant and a CPA. And then later on decided that I got into real estate because I needed some kind of freedom to create a legacy for my family. So I'm not in a situation where I was myself when I was very poor and hungry when I was young. And I wanted to build a nest egg so that we don't have to worry about money anymore. And that's the reason why I created my own company. And I realized that real estate was my passion and that's where my heart belongs. And so I put all my eggs into this basket and put all my focus into real estate to grow my company.
Man, what a story. So how old were you when this all kind of went down?
I was when I was born, the war ended, and then I came here when I was 5 years old in America, so I was very young.
Okay. How
And
much of it do you remember like that? Because obviously from, 0 to 5, at least my memory is super foggy.
Yeah,
But you went through experiences like nobody, so how much of that kind of do you remember? Do you feel like you remember?
if I was a little kid, I think I remember I was being maybe in jail under the communist regime for a
Wow.
short period of time, but I don't remember the pain because I was too young.
Yeah.
My dad would definitely know the pain because he's been tortured and beaten and robbed. That's definitely you know that. But for me, I was too young, and they wouldn't torture a baby. They would just don't. They would give like maybe one bowl of rice a day or something, you know, like for the whole day or something. So that's kind of torture in itself. Just giving you like one bowl of small rice or something, or broccoli or something. Um, so we had to bribe the guards at the time and say, "Hey, listen, we'll give you some money and just let them go." You know, so we had to do some bribery because in the communist regime, it's all about bribery, and the guy takes money, he looks the other way, you know. So
Hmm.
so my uncle rescued us, and because he was a goldsmith, he gave him gold. He said, "I give you gold, you let them go." And then we had to escape because we be robbed every single day. You know, you had no freedom under the Ho Chi Minh regime. You know, that was very difficult. So then we fled and then worked hard. And my mom said, "Want you to become a doctor, a lawyer, or a dentist?" And my dad said, "Hey, I was a dentist. My grandfather's a dentist. I was someone you to be a dentist." And my oldest brother became a dentist because he had to carry on the torch. And for me, I could have been, you know, I had no idea. When you're young, when you're growing up, you had no idea what you wanted to be. When you're a
Yeah.
freshman in college or something, you have no idea. And I had
No.
no idea. I was totally lost. I was like, I was undecided. I was like, I have no idea. And then I asked my older brother, you know anything I should do? He said, just want you to do business law or something, or study that. I'm like, okay. And then I found accounting through business law. And I said, you know what? I guess, be an accountant. I don't really know what that meant at the time. So it fell in my lap, basically. So
How long did you do that before you well, how long did you do that? Yeah, before you quit full and went full time into real estate?
I did a part time. I probably spent 3 years part time, and after 3 years, I sold some of the first buildings I acquired. I mean, I had enough capital to have a runway,
That's great.
and then after that, I started getting more assets and getting more momentum, and I now have true financial freedom.
When you started in 2003, that was when the real estate values were skyrocketing. And then obviously we hit the great reset, the great recession. Were you affected by that at all?
No, because at the time I bought it with a fixed debt, and I was working a full time job, and I was only buying like residential, like in New Jersey, I bought condos.
Hmm.
So I had tenants who paid me. So I made, you know, some income, but it wasn't much. And I bought three of those. So I did pretty well with those. I sold two later on, but I did pretty well with those. But I realized the changing factor was that's just small passive income or very low income
Yeah.
versus commercial where you can scale to a larger heights. Whereas you buy like one single house. I mean, how many houses do you need to really need your job, which is a lot. So that was the issue that I realized I needed scale basically.
Yeah.
Yeah.
Well, and the thing that I noticed with the houses is the more I got, it takes up way more of your time. And all of a sudden, you don't have enough time. So then you have to start hiring people. But that takes away from your profits. So now you just need
Yeah,
more houses. And
yeah,
so it's like, I got to a certain point where I'm like, okay, if I just get I just get a handful more houses, now I've got enough income coming in where I don't have to do anything other than just manage these houses. And then I got a handful more houses. I'm like, I got to hire people now.
yeah,
It's
yes,
people.
yes,
And I'm like, man, I got to buy more houses now.
yes, yes. And that was the issue I was facing. And I was like, you know, how do I leave my job?
Yeah.
I was really the question, how to leave my job. That was like, I was trying to leave my job. I was like, go. So,
So what commercial real estate you decided to go into that? What was your first asset that you bought?
so I joined the mentorship program, you know, Michael Blanc, and Drew, your partner, was my mentor. And basically, I went to multifamily. That's what they do, and I was taught how to syndicate multifamily. And my first asset was 56 unit in Oklahoma City.
Hmm. Why Oklahoma City? Because you're not from Oklahoma City.
I'm not. I lived 3 hours away in Dallas,
Yep.
and the basis is low because Dallas was really hot that time, and you have to put a lot of hard money, which means day one you could lose all your
Right.
at risk money. So I didn't want to put like, you know, large sum and lose my money. Whereas Oklahoma was less competitive, and mine was only like 56 unit, it wasn't like over 100 units. It wasn't competitive that way.
Hmm.
So I had no hard money. and I got low basis. So I was like, that's good for a student for a first deal. It's good. It's good for those ideal entry markets.
Did you syndicate that first deal?
Yes, I did. Yes.
How much do you remember how much you had to raise?
750,000.
So for somebody who's wanting to syndicate their first deal or wanting to figure out how to raise capital, what did you do to start out to raise, $750,000 on your first deal? What are the steps that somebody needs to take?
Yes, I would say before you get the deal, you just gotta talk to people, your family and friends, which is the circle who know and trust you, or your colleagues, and just say that, hey, I'm doing real estate. I buy multifamily. When I have a deal ready, I'll show you a package, like a deck. And if you're interested, check out my website for now. I'll put you on the list, and you can receive my monthly newsletter. That's what I said. And I did a little meetup too. I did a small little meetup in the beginning, and that's how I got my first investor actually from a meetup. And he believed in me. He started raising capital for me too, as well.
Oh, wow. Do you still do that meetup?
After COVID-19, I stopped because of COVID-19. They don't want no meetup. And now, one of my friend who does cost segregation for me will sponsor my first meetup, which is this Thursday, my first meetup. I'm starting it up again. But this situation is a little different. He's gonna give me an office space and food and everything. So this will be a sponsored event, not just a regular event I used to do.
Yeah, that's great.
Yeah.
And are you doing like lunches, dinners? What do you happy
I
hours?
do like a 2 hour networking event. We'll provide food and drinks, and I tell my fellow students or colleagues or anyone who wants to come and post on my Facebook group and just tell them to come. I have the max right now is sold out. It's 40 people because that's how much you could fit. And then later on, it gets bigger and bigger. We can move to a bigger venue. But with my first one, this restarting it up.
So why are you starting one up and not just attending all the other ones? What's the benefit?
So there's a benefit where if you the host, you get more, I guess, in a way, credibility, and people can see you more in that light. So like a podcast host or one of the leadership platforms. Um, I also do attend other networks to network, but if you have your own, it's better because now people come to you, they know you. You can offer some kind of a mentorship if you wanted to do that, or investment deals, and be in your ecosystem. So Greystone, I'm growing my ecosystem. I have a mentorship program. I have a fund that I launched. I have deals that you can invest in. So I have an ecosystem that I'm growing basically.
Yeah, so that's a huge benefit, right? So if you think about attending somebody else's, which is great, but you're not the speaker, you're not the one up on stage. Maybe you get a chance to speak once in a while, but
Yes.
that's not what you're doing every month. You're not introducing the speakers. You're not kind of being seen all the time. You're more
Yeah.
in the shadows where if it's yours, you're the one being seen. People recognize your name and they start to it's all about know, like, and trust, right?
Yes.
And they're gonna trust you, they're gonna like you, they're gonna know you because you are the one running the show.
Yes. So it's just a leadership, almost like a leadership platform where if you host it, you become more like a leader, and they see you as a authority in that space, and they'll trust you more, and they'll come to you. They'll come to your ecosystem ultimately, and your deals and your what do you offer basically.
So you're also doing self-storage. Why self-storage? Why did you just focus solely on multifamily and continue, or why did you branch out and start doing self-storage?
That's a good question. During that time, I acquired like several properties with Drew, a mentor, and it was doing well. But the problem was it got too hot. It got too competitive, and especially where I live in Texas was
Yeah.
crazy. I mean, they're doing bridge loans and very hard, like expensive hard money. It was just too. The price was outrageous, and I wouldn't pay for outrageous price that would hurt my investors' return. So I said, you know what? I cannot outbid these groups. So I need to go to a different asset class. I was looking at industrial, car washes, and then I found self storage. And at that time it was good because during the pandemic, everyone was moving, so everyone needed like an RV or they needed like a mini storage, and you can automate a lot of these processes, which I love. because in multifamily it's very hands-on.
Yep.
It's much more hands-on than I ever expected. I thought it
Yep.
was more like passive, but I didn't know it was such a beast to manage. I just because it goes downhill really quickly if you don't watch it very carefully.
Yeah,
Whereas,
it's still a people business, right? You still have to
yeah,
rely on your leasing team and your maintenance team, and it's still a relationship business.
right. And then your biggest challenge is your property manager
Yep.
in multifamily. Whereas if you have a small storage, you can just self-manage yourself. You put automation in place. It's relatively not that difficult. The only thing you really need is to watch your competitors, and you need with demand. That's what you need. So if
Mm-hmm.
you have good demand, you're fine, and good service. That's what you need. So I decided to go that because I was interested in the automation aspect of it and how easy it was. And so I found someone on Facebook actually, and we partnered up, and he taught me the ropes, and that's how I learned. And then through trial and error, and also going attending conventions, I learned a lot. And then after 3 years, we accumulated a lot of over 1,000 units in self storage. And I know I'm pretty subject matter expert in self storage now.
What do you do to determine the demand? You said that that's a big one. Is the demand. What do you do to determine is it there, and is it going to get absorbed too quickly by new units coming in, or what are you looking for?
So there's a complicated formula that you can calculate. You can run reports so similar to a CoStar. It will tell you what's the demand, what's the future prediction. It will tell you what's the square feet, and how much is oversupplied, undersupplied. And that's assuming there's assumptions that there's number of new builds. So you don't know until like 2 years later, it could be different, right? But within like 6 months or 1 year, they predict this is what's going to happen. And as long as your population growth and moving is strong, even with one or two new builds, you should be okay. But if your population growth is not strong and it's kind of like low demand and there's too many competitors nearby, you'll be fighting for the same customers. So you'll be like you'll be oversupplied and lower demand. So that will hurt you in your occupancy and in your rental rates as well. So that's a study that you can do on your own. Also you can hire a third party advisor for that.
What I'm going to shift gears a little bit. What's a mistake that you have made in your journey? How have you learned from it?
Yeah, I made a few mistakes in my journey. I learned big lessons from it. But anyone in this business will make mistakes, and you have to learn from it be better at it. Basically, one mistake was I bought a second property in OKC, and it was COVID-19 at the time, and we didn't do a very thorough check before we closed. And sometimes in COVID-19, like, you don't want to open the door to tenants, and it's like, yeah, and you don't want to go in. It was kind of a different time. It wasn't a normal time.
Yep.
So I said, okay, we can't go in, just leave it alone. But then what happened was they misled us on the occupancy. There was a big difference in what
Mm.
was on the rent roll and the occupancy. That's what hurted us.
Yep.
And that's why that deal got hurted in the beginning. So it was a very challenging deal. So that's one of the mistakes I'd done. And that was kind of unusual time where it was pandemic and they said, don't come in. And I didn't know how to do that because I don't want to be rude either to just force them in either. So
Yeah.
to check the occupancy.
Yeah. That was certainly a weird time. And you're right. You felt awkward trying to force yourself into somebody's unit, and everybody has a different, I guess, tolerance of
Hmm.
that. And so I could see
Right.
how you could easily uh, not understand the true occupancy of a building. It's really easy during that time for a seller to kind of hide something like that. Say, oh,
Yes.
these are
Yes.
occupied units. They just don't want you to come in, you know?
Yes. Yes. And they refuse to come in. They don't, respect his privacy or something like that, like to that effect. So
Yeah. What's uh, what's a habit or like I don't know, your secret to just just being successful, right? So to how you've grown and scaled your business, but maybe a couple, maybe one, two habits or things that you do that you think have been really key to your success and growth.
I think the key is having the right mindset and doing a routine, consistent routine, which I call mine the miracle morning. which is basically I like this morning I exercised for an hour with my wife. I then I ate a healthy breakfast. Then I meditated for like 20 minutes, and I do that every day. Besides the days that I'm very busy, but most days I do that consistently. And you have to visualize for your success so that then you grow, and then the universe would know because you're tapping into your consciousness, and the universe would know and send back the affirmations, and they'll help you manifest into the 3D world and grow, basically.
So it's all starts in the morning, exercise, eating healthy, meditation, and that is key to. Do you read anything? Are there certain books or maybe audibles or podcasts that you really focus on to get your mindset right?
Yeah, I like this one called Next Level Soul for your body and soul and mindset. I really like that one. If you ever just check it out on YouTube, it's really good. Alex Ferreira, he's really good about mindset and if you're interested in near-death experiences, he talks about that too.
Hmm.
NDEs. So like what happens when you pass away and stuff like that. And the other side, the spiritual realm, he talks about all that stuff. So
Interesting.
that's more about your spirituality, your mind, body, and soul. What happens when you pass away, basically.
Yeah. What's a favorite book that you passed on to our listeners?
I like the Rich Dad Poor Dad, Robert Kiyosaki, which got me started in real estate. So I think that's a very motivational book. If you brand new to it, don't know real estate, that's a great book to start. And then I guess those are books that I know that I read. And then Michael Blanc has a book too, I think Financial Freedom or something to real estate or something.
Where where's the company going? Where is Greystone Capital Group going to be, over the next couple of years? What are you guys looking to do?
Yeah, thank you. That's a great question. We have very great ambitions, very passionate what we do. We launched our new fund called Greystone Multifamily Income Fund. We are funding our first asset. So when we do for that, then we're gonna start raising for that fund. We just right now we're not raising because we want to identify the first deal. So the traditional blind pool fund. That's what we're doing now, and I have a team in place, and I also do my own little sort of mentoring some students, and I am have my own meetup, and I'm looking at other like asset class, like triple net asset class as well to add on to my portfolio, just for legacy holding, just for me and my family, and no investors. So I'm looking for those as well. I'm looking at something as well too that's very unique. I might branch into student housing for multifamily. It's a very
Hmm.
unique aspect I'm looking into as well. So.
Is would that so in within this fund, is it mostly multifamily, mostly self-storage? Would it be the student housing, or does it be a little bit of all of it?
No, right now the main focus is multifamily, workforce housing, Class B, Class C, value add. But only on the side, I see some of the smaller deal that makes sense for us. I may acquire it and hold it. Even like a small storage deal that is near my base where I like the demographics. I like the based on my experience. I might grow the surrounding base because I know the area very, very well, intimately.
Sure. That makes sense.
Mhm.
Um, what is the market? What are you seeing out there in the market? It's crazy. It's been crazy. We haven't bought a deal in a year.
Yeah.
Um,
And me too. For myself, yes, that's true.
Same thing. Yeah.
Yes.
So, what are you seeing out there? As you're looking at deals, is you're underwriting deals, or are deals starting to pencil, or is it really tough still? You're in different markets than we are, so
Yeah, in Texas, it's still difficult. And I've been talking to brokers like every week. I have my team try to reach every single week. And they say they have nothing to fit the criteria yet, but we'll keep an eye on the horizon. So every week we keep sending emails and texts. And I do a lot of touring to build a relationship with my brokers and have coffee. So we always do that to consistently get in the forefront with them. And I have a team that does all the acquisition. Her job is to just follow up, look at it, underwrite, and see if it makes sense or not.
yep.
So I've been doing that, and nothing I see that really pencils in that I like.
Yeah.
And if I do like that property, I'll give them a much like a lower price, and I'll call the broker and say, hey, this is what I'm looking at. Would this be acceptable to the owner? And he'll let you know if that's something that's even remotely possible. So
Yeah, it's interesting. There's most people that I talk to are kind of exactly the same as you. The stuff's not penciling. They're still off by 10, 20%. And then every once in a while, I see and hear from the groups that are just buying like crazy. And I wonder what they're doing and how they're making those deals work. But, that's maybe a different show.
yes, yeah, I'm not sure, but to get the really diamond in the rough, is those are hard deals to get.
Yeah.
Yeah,
Yeah, for
it's
sure.
hard to get. Yeah.
Well, Jonathan, I got one last question before we wrap up. What are your three pillars of wealth creation?
Yeah, so one I touched upon was the mindset. It's very important you have a good mindset and you have some type of consistent ritual you do daily. So if you like reading a book, you like meditation, you like exercising, you like eating, what do you need to do? You need to put a routine, whether you do it in the morning or whether you do it. But I like to do it in the morning because to me, that's like the best time when you wake up. It's called a golden hour where your mind is fresh and you can connect. So I like that. Um, just do it consistently and you grow. Surround yourself with positive people and not negative people will bring you down. So you have naysayers. You're gonna have a lot of people who's naysayers or jealous of
Mhm.
you, and you gotta
Mhm.
tune them out, right?
Yeah.
So you gotta tune them out, and that's the key. And then the second I'll say is partner with someone who's more experienced or hire a mentor if you don't know what you're doing. That's very important. And the third pillar is you have to start scaling afterwards. So first is mindset. Second is partner with someone who knows operation how to do it, so he can teach you, like hire a mentor. And the third pillar is then you're at a point where once you understand it, how are you gonna build a system to scale your business? You need a good system, you need a good team to really scale to the $1 million range.
Love it. Love it. Um, Jonathan, how can our listeners get in touch with you, learn more about what you got going on?
Yeah, they can go to GreystoneCapGroup.com. I have a free ebook on the passive investment guide to syndication. I have a DD checklist, and I have the fundamentals of investing for your listeners. It's free. I have a free podcast with free contents. And also, if you're in Dallas, I have a free meetup. Come enjoy the meetup. We'll meet in person, shake my hand. And that's how you get in contact with me. My contact is in the website. Just click on the button, and that's what we have.
Love it. Jonathan, really appreciate it. Appreciate you joining the show, and you have a fantastic rest of the day.
Great, thank you.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.